Hope everybody can hear me okay. Fantastic. I want to once again wish everybody a very happy new year. Thank you for being with us this morning. We have a lot to be thankful for, especially after the year that we've had last year with the great surprise that we've had. Truly, we need to also be grateful, not just for our health, but also the fact that our industry was so untouched compared to so many people around us. The real estate market definitely demonstrated resilience that we've never thought we would expect, especially for many of us who've been around the business for a very long time and dealt with different recessions and different ups and downs. But we have a great lineup today. Today we have a couple of fantastic guests that I've known for quite some time. Last year, around this time, we had a special guest by the name of Rishi Sondhi from TD Canada Trust. We talked about the pandemic. We touched on a little bit, and here we are today, a year later, together again. One of the benefits of being in an environment like this one, I guess, is I will share with you that every year we worry about the weather. We wonder if there's going to be a snowstorm and if we're going to have a great turnout for our AGMs. And wouldn't you know it, there's a lot of snow coming, sweeping through the city today. They're calling for anywhere between 5 and 15 centimeters, but guess what? It doesn't matter because we're actually remote. And the only thing that we're really missing greatly is our personal interaction together, which I can't wait to have again, and that amazing breakfast and or lunch that we serve at these events. So I'm looking forward to having those again. But so we respect your time. I'd like to start off by introducing our first guest. His name is Rishi Sondhi, joined the TD Economics team in 2017. His main responsibilities include analyzing and forecasting provincial economies and housing markets. Rishi also contributes to a variety of TD publications. Prior to joining TD Economics, Rishi worked at a real estate consulting firm where he researched and forecasted housing markets and economic activity. Rishi also has forecasting experience with the Bank of Canada, the Ontario Construction Secretariat, CMHC, and another major financial institution. Rishi holds an honors BA degree in economics from the University of Western Ontario. Let's all put our virtual hands together for Rishi Sondhi, our economist from TD Canada Trust.
Hi there. Hi, Tim. Thank you so much for having me this morning. I'm sorry for the delay here. I'm just figuring out all the technology. I'm an economist, and we're generally pretty slow when it comes to technology, so just bear with me here. So good morning, everybody. Thank you so much for having me again this year, Tim. It's a pleasure to be here this morning virtually, as you say. Actually, I was following the chat before we all sort of started, and one of the members here noted that it was Paul Newman's birthday today. So I just wanted to share that in the office they call me Cool Hand Rishi. So I think that was kind of an interesting sort of coincidence there. So, anyways, good morning, everybody, and again, my name is Rishi Sondhi, as Tim said, and it's my job this morning to deliver our TD's economic outlook and our outlook for the GTA housing market for this year. So without further ado, I'll sort of jump right into it. So starting with the economic outlook, and specifically where we are. So there's going to be a lot of charts here, so bear with me. I do realize it's early in the morning, but there's some good information here too, I promise. So Ontario's economy, when it's all said and done, probably contracted by about 6% last year, which is absolutely brutal. For reference, in the global financial crisis, the economy contracted by about 3%, so double the hit from the global financial crisis, which is quite bad. Ontario actually performed worse than Canada overall. And why is that? Well, it's because our COVID-19 outbreak was much more severe than the rest of the country. So the restrictions put in place to combat the pandemic were relatively more severe and therefore caused a greater hit to economic growth. So that's sort of the chart on the left. The chart on the right shows employment in Ontario and Canada there. And what it shows is that during sort of the first wave there in April and May, employment contracted by a lot. It was peak uncertainty. It was the height of the first wave, and then as sort of restrictions were eased, employment kind of moved higher in both Canada and Ontario. But what's interesting is from October, there's been a new set of restrictions that have been placed on Ontario's economy. If you recall, there was the modified stage 2 in October. There's the whole color system in November, and now finally the whole province is in lockdown for certain key sectors, right? So, but the interesting thing is that employment is held up relatively well this time around, much better than sort of during the first wave, which means that the economic hit from the second wave or the second round of restrictions during the second wave isn't as severe. So that's a good thing, and there's probably a couple of reasons for that. First of all, the amount of industries that have been targeted in the shutdowns is less this time around, and also I think people and businesses have kind of gotten used to the pandemic to some extent, so they've sort of made their adjustments, and they've sort of learned how to operate in this environment. So the pandemic has had an uneven impact on the economy, both geographically in terms of industries. So the GTA economies actually performed worse than the province overall, and that's because our dense population gave rise to a worse COVID-19 outbreak. So our restrictions were worse relative to the rest of the province. And then the chart on the right shows GDP, which is the measure of economic output by industry, right? So there's a handful of industries that have done absolutely horribly during the pandemic. They've just been devastated and brutalized by the pandemic. Meanwhile, the rest of the economy has actually done pretty well. We've actually staged a full recovery outside of these really, really weak industries in the rest of the economy, which is pretty remarkable considering where we came from. So this rest of the economy includes real estate, construction, finance and insurance, IT, the public sector. So if you aggregate all these industries, they've staged a full recovery, which is again pretty impressive. But in terms of some of the weaker performers, you have the transportation industry, like subways, airlines, which are obviously suffering under travel bans and border closures and the like. You have the accommodation and food industry, which is like hotels and restaurants. As you recall, restaurants have been in-person dining has been closed since October in Toronto, so that's it's obviously bad news for them. You have personal services, which is like your hair salons and and the like, and they've been closed for some time too. So there's a struggle there. And then finally, you have your arts, entertainment, recreation. This is like your Raptors games, your Jays games, Leafs games. Well, maybe not the Jays, but the Leafs. Your Ripley's, believe it or not, your museums, so on and so forth, right? So these entertainment areas that have also been closed, right? So these high touch sectors that require a lot of face-to-face interaction and people being close to each other have done pretty poorly through the pandemic, and they're really the ones that are struggling. There's another sort of uneven impact or dimension of unevenness to the pandemic that I'll talk about right now, and it's that the majority of jobs lost have been in younger, lower waged workers, right? So the impact of the pandemic has been felt on younger, lower wage workers, because they're the ones that tend to work in the arts entertainment industries, and in restaurants are the ones that tend to be the wait staff, maybe perhaps even the the chefs and the cooks in the various restaurants. So that's really where the pandemic's impact has been disproportionately felt. So that's sort of a quick overview of where we are. The interesting question becomes, where are we going? So our forecast, the Bank of Canada's forecast, many forecasters' projections crucially depend on the rollout of the vaccine. So I thought it'd be, helpful to, print out or supply what Ontario's vaccine rollout plan is, just for informational purposes. So there's basically three phases to their plan: phase 1, phase 2, phase 3. We're in phase 1 right now. Phase 2 is supposed to start in March, but we'll see. And then we have phase 3 in August. Phase 1 is basically the vulnerable populations. Phase 2 is the vulnerable populations plus the essential workers. Phase 2 is the vulnerable populations plus the essential workers plus the older populations, 80 plus, and then down in 5-year increments. And then phase 3 is the rest of us. And it's obviously been all over the news. Canada's not receiving any vaccines from Pfizer this week, so that's caused some, and there's some uncertainty as to how the vaccine rollout is going to evolve through February 15th. So there's some uncertainty there, and there's some distributional challenges that the Ontario government is sort of facing. But Trudeau was on the horn with the CEO of Pfizer, and he guaranteed that, or he promised that by March things would be back on schedule. So what the province has done in response is they've shifted to only vaccinating the most vulnerable people, and the essential and the healthcare workers will then follow. So that's sort of the lay of the land there. So the chart on the right there shows the Ontario government's expected receipt of vaccine doses from the federal government. So we can see they expect it to sort of ramp up through March, but then in April, that's really when the vaccine dosages are really supposed to ramp up. They're expecting to receive 5 million per month. So there's some heavy vaccination that's expected to take place sort of in the second quarter of this year. So that directly has a direct bearing on our economic forecast. So this chart shows quarter over quarter economic growth in Ontario. We don't have data for any of these quarters, so it's the final quarter of last year through the final quarter of this year. But we have a pretty good read on the final quarter of last year. It looks like it was a pretty strong quarter for growth. We are expecting economic growth to contract or go negative in the first quarter of this year, and that's a function of the restrictions that were placed in late December, the industry closures. But as I mentioned before, we were expecting the vaccines to ramp up quite materially in the second quarter of this year. And that'll allow, probably the entire vulnerable population of Ontario to be vaccinated. And if and when that happens, then policymakers will likely have a greater confidence in the ability to ease restrictions and open up some of these industries that have been suffering. And that should cause a bounce in economic growth, a pretty strong bounce in economic growth in the second quarter. And as the vaccine is more widely distributed, business and consumer confidence should rise, and people should be able to get out of their homes and spend on some of the goods and services they have been able to spend on, in the wake of the restrictions. And that should fuel robust economic growth for the remainder of the year. So what's the Bank of Canada to do in this environment? Well, we expect them to basically stay on hold till 2023. Now, why? Well, because they've told us they're going to stay on hold till 2023. They did that, on Wednesday during their latest interest rate announcement. They said that they want to see inflation hit the sustained 2% level. Canadian consumer price inflation hit the sustained 2% level, and they don't foresee that happening until 2023. So that's basically the big reason why we expect them to be on hold. But there's a few more nuances behind that expectation that I'll get into. So firstly, I mentioned that economic growth is going to be quite robust in the second quarter onwards and for the remainder of the year. But just because growth is strong, it doesn't mean that the level of economic activity is exactly where we need it to be. So even though, again, growth is going to be strong, we're still far away from the level of goods and services that we were providing in the economy before the pandemic hit. So that's one consideration there. There's a lot of slack in the economy. So that's one consideration. So given this slack in the economy, we think that inflation will only slowly creep higher. And this is really the thing that the Bank of Canada looks at the most closely with respect to setting interest rate policy. What's the potential trend in inflation? Well, we think inflation will only trend towards the bank's 2% target by 2022, 2023. And it has to be sustained at that target for a certain period of time. So that's why we think they're going to be on hold for a long period of time, just to make sure that the economy is on a firm path of recovery and that inflation is firmly entrenched in the 2% target. So that's sort of a lay of the land with respect to the economy. Let's talk about some of the legacies of the pandemic now. So Canada, like many other nations around the world, is now highly, highly indebted. The federal government's, this is at the federal and provincial level, so the federal government's net debt to GDP ratio, which is their major debt measure, is about 50%, which is gigantic and a huge step up from what it was before. But notably, it's not the biggest it's been in recent history. If there's probably some people on the call here old enough to remember sort of the fiscal crisis in the late 80s and the early 90s, the federal fiscal crisis. And Tim just put his hand up. The net debt to GDP ratio then was 60%, right? So we're at 50%. now. It was 60% back then. So we're not in such a bad shape fiscally as we were back then. So we don't, there's maybe less worry when you look at it in that regard. Also, but that said, it's still an extremely elevated debt level, and it'll have to be reckoned with once we sort of grow away out of the pandemic. This is arguably a legacy of the pandemic, but Biden's now the president of the U.S., and this is probably somewhat a function of the fact that Trump bungled the pandemic response so badly. But so I thought it would be good to sort of review some of the negatives and the positives associated with the Biden presidency for Canada. So on the negative side, he's canceled the Keystone XL pipeline, which is bad for Canada overall, and certainly bad for Alberta, which some potential spillovers for Ontario there. But at the same time, Ontario is a net oil importer. So to the extent that oil prices are negatively impacted by his decision, that could be a bit of a good thing for Ontario, because it means lower oil prices for us, because we import a lot of oil from Alberta. So yesterday he signed Buy American provisions. He moved to strengthen them, which basically means that it's going to be harder for any country that's not a U.S. country to bid on federal procurement projects, right? So that's not such great news for Canada there. But then on the positive side, he's trying to push in a massive amount of fiscal stimulus, $1.9 trillion, which would be on top of $900 billion that's already been, approved, right? So we don't think all that 1.9 trillion of stimulus will get pushed through, probably, a little bit less. But nonetheless, it'll support the economic recovery in the U.S., which of course will bleed over to Canada because they're our largest trading partner. Of course, there'll be more stable Canada and U.S. relations versus Twitter Trump. He's going to force some companies, or he's going to want to try and force some companies who are carbon emitters in the U.S. to kind of respect the rules of the Paris Accord, and that could raise some of their costs and sort of level the competitive playing field with some of the Canadian firms that are dealing with the carbon tax. And also he wants to raise the corporate tax rate to pay for some of his infrastructure and green energy initiatives and the like. So if you raise the corporate tax rate, that in turn would make Canadian firms more competitive sort of on the global stage by this measure. So the final, legacy of the pandemic that I'll talk about is what they call job market scarring, right? So what this means is that, in April last year, the unemployment rate shot up to generational high, and it's only slowly sort of coming down as the economy improves. So what that means is that there's some people who have lost their jobs, who are still unemployed, and what that means is that their skills are atrophying, and it's possible that they're just going to drop out of the labor force, which means that the productive potential of the economy is then permanently hit by the pandemic. So that's sort of the lay of the land with respect to the economy. Let's talk about what we're all here for now, which is the GTA housing market. So I've titled this section "The Race for Space," and I think in a few slides you'll understand why. Okay, so before I get into this, I do want to say that not everybody, was totally fooled by what was going to happen in the pandemic. So this chart shows forecasts made in April and May last year. Just sort of in the height of the first wave, the height of the uncertainty. Basically this is people's essentially their gut reaction as to how home prices would evolve, and this is Canadian home prices, right, over 2020 and 2021. So the blue line at the top there is what actually happened to home prices in 2020, and the red line was our forecast for 2020 2021 made back then, right? And then there's a whole bunch of other forecasts that happened, right? So we were the closest forecasters, right? So whatever our logic was actually played out pretty well. So the upshot of that is you better listen to what I'm saying right now. But anyways, so I just wanted to bring that up. So let's go to the market now. So as Tim alluded to, it's been a very, very hot market in the GTA. It's been largely almost completely untouched by the pandemic. It's been month on month of record sales levels, June, July, August, September, October, November, and December is an absolutely gangbusters month for sales for both condos and single detached. It's like we didn't even have Christmas, or there was no Christmas break or anything for sales. So it's a really, really hot, really, really robust market. So why? The question is why? Why is it such a strong market? Well, there's a lot of factors. First of all, there's some pent-up demand that was lost during the April-May period that need to be made up. Second of all, interest rates are at record lows, and that's obviously extremely helpful from an affordability perspective. Thirdly, as I mentioned before, the impact of the pandemic on the job market has been concentrated on lower wage workers, right? So younger, lower wage workers, and these people, these individuals don't tend to own homes, nor do they tend to be in the market for ownership housing. So the direct impact of the pandemic, the real estate industry has been shielded from the direct impact of the pandemic because of who it's hit. That said, there has been some, I will call them indirect impacts, right? Because these younger people are also renters, and the renter market is suffering a lot. Rents are falling, which makes owning, a condo as an investment property a little bit more of a difficult proposition. That's probably impacted condo demand to some extent, and most assuredly boosted condo supply in the market. So one of the other major drivers of the robust sales environment that we've seen is what I call the race for space. So there's been this massive surge for detached housing in the GTA. And this is not a GTA specific phenomenon. This is happening in markets across Canada. It's happening in markets across the US. It's happening in markets across Europe. It's a global phenomenon, this race for space. People want space. They're working from home. They want to escape the density of urban living. They want to escape the density of condos. And this has really been a massive driving factor of the heat that we've seen in the market. So if you just quickly look at the chart on the right, I've charted, how the various regions within the GTA performed from a sales perspective last year. And I would say relatively unsurprisingly, Durham has kind of led the way, followed by Dufferin and Simcoe, which, Treb tucks into their data for some reason. But the thing with these two jurisdictions is that housing there is relatively inexpensive, so it's not surprising that they've outperformed. And then on the opposite end of the spectrum, you have Peel and Toronto, which is underperformed because they're overweight condos, so they have a relatively high share of condos, which haven't done as well during the pandemic. So turning to prices, average home prices have blown past their pre-pandemic levels. In December, they're almost at a record high. So it's a very frothy, very sort of elevated price environment that we're dealing with right now. And there's a few reasons for that. First of all, as I mentioned before, sales growth has been quite robust. So that's put upward pressure on prices. Also, markets are tight from a supply-demand perspective. There's just not that much inventory out there. Particularly in the low-rise space, so that would fuel bidding wars. And then finally, we're talking about average prices here, right? So it's an average of what's been being sold on the lower end, middle, and upper spectrum, right? So if you're selling more detached homes, that means you're selling more expensive homes in the aggregate, which boosts the average price just by construction. So there's some factors there. So this chart sort of just crystallizes what I was talking about before. So the chart on the green line shows, benchmark single detached home prices in the GTA. And as we can see, for over a year, it's basically been a, straight line drive up, except for some, sort of a minor detour during the pandemic there. It's a different story for the condo market. Condo prices have sort of turned downwards on a year-over-year basis, and indeed have fallen for three straight months. So they fell in October, November, and December. So even though condo prices are falling, I wouldn't say the sky is falling with respect to the condo market. So, sales are still going up. Condo sales are still increasing. So this chart shows year-over-year growth in condo sales. So as you can see, they performed really badly during the worst of the pandemic in the first wave there. But, growth has turned positive. Condo sales growth has turned positive as of, July or so, and it's remained positive. And of course, December was a sort of a gangbusters month for the condo market, which I think had to do with the fact that there was heavy discounting heading into that month, and that probably encouraged some bargain buying and probably lured some investors back into the market. So I think everybody on this call knows that, in the condo space, it's not really demand. I mean, demand is holding up okay. It's really supply that's the big story here, right? So, the condo market is I would say, oversupplied. Supply has grown much more strongly or rapidly than demand has in the condo space. And we think there's a few reasons for this. First of all, there's the Airbnb owners that some of them are probably putting their properties on the market because the Airbnb business model has been decimated by the pandemic. That's firstly. Secondly, excuse me, as I mentioned before, population growth. Well, I'm mentioning now, population growth has slowed. The jobs market for younger individuals has been bad, so that's hurt. The rental market, so rents are falling, which means that owning a condo for rental purposes as an income property has been made a little bit more difficult. So there's likely some investors that are listing their property for sale just to kind of liquidate and get out of that space, just given the weakness in rents. And then finally, there's probably definitely a whole cohort of people that are trying to sell their condos to trade up into these detached units. So there's lots of sources of supply that are sort of impacting the market at the moment. So when you look at the rise in condo supply across jurisdictions, the rise is pretty broad-based, but it's particularly concentrated in the MLS zones of C1 and C0 right in Toronto, which is basically downtown Toronto. So, really those micro condos, ones that are, 500 square feet and less, are the ones that are really seeing an increase in supply. So that's sort of the lay of the land with respect to where we are currently. The question becomes, where are we going? And recall that first slide that I put up, so you better listen. But so starting with our outlook for sales. So this is GTA home sales. Our expectation for GTA home sales moving forward. So overall, we expect 2021 to be another very good year for the real estate market. So that's, I think that's some good news if we turn out to be right. But we do expect sales to start falling as the year progresses. So overall, the level of sales will be high, but they'll start to fall as the year progresses. So the question now becomes, why do we expect sales to fall? Well, I'll get into that right now. So this chart, requires a little bit of explaining, but I think it's an important one. So if you look at the black line there, that's actual sales. So that's what's currently happening in the market, right? And the green line is fundamentally supported sales is what we call it. And this is basically sales levels that are supported by the GTA's population base. So right now, what we're doing is we're selling way too many homes that can be supported by the underlying population in the GTA, which is not sustainable over the long term. It just isn't. So there's going to be some reckoning from that perspective that happens. That said, there can be moments in history where actual sales levels deviate from fundamentals, like from that, from 2015 to 2017. You can see in that chart there was that deviation. And as you recall, that 2015 to 2017 period is when the GTA housing market was running extremely hot. Prices were growing at about a 30% year-over-year pace. And basically, the housing market was in a bubble, and it necessitated the provincial government coming out with a fair housing plan to pop the bubble, right? So it can happen, So do we think that it's going to happen this time around? No, we don't. We think that there's some compelling reasons as to why we think this gap will be closed. I'll get into them right now. First of all, we think interest rates are going to slowly creep higher from their record lows moving forward as economic growth improves and inflation risks rise. So one important thing to note is that interest rates, bond yields can move independent of what the Bank of Canada does. So the Bank of Canada might want to hold rates on hold, but that doesn't mean that bond yields are necessarily going to cooperate 100% of the time. There's other factors that influence bond yields. So we think that interest rates are going to creep slowly higher as the year progresses. And if you compare that to the 2015 to 2017 period that I was talking about before, interest rates were on the way down back then. So we think they're going to be on the way up slightly. Back then, they're on the way down. So that's one factor. Another factor is just the sheer affordability in the market. So this chart shows our affordability metric. The higher the metric, the worse the affordability. You can see sort of in the late 80s, early 90s, their affordability was absolutely terrible. I think everybody remember when interest rates were at 13% or so. We're actually at the worst affordability levels right now than we've been since the early 90s, and certainly worse than that 2015 to 2017 period that I talked about before. So just this sheer starting point of affordability makes it tough to sustain the current sales levels. And finally, there's just not that much inventory out there. So this chart basically shows inventory in Ontario, and it's fallen quite low. It's lower than that 2015, 2017 period, and certainly lower than all the data in this chart. So there's just not that much inventory out there, particularly in the detached space where all the demand, or a big chunk of demand, is currently at, right? So if you don't have supply out there to sell, there's just a natural speed limit or natural brake that's placed on the pace of sales. I guess not. Finally, there's one more thing. So this chart shows the ratio of detached to benchmark prices. So basically, what this ratio, or what this chart is saying, is that because single attached prices have grown so much more quickly than condo prices have, it's getting harder for some people to move up buy, right? So their condos aren't worth as much as they were vis-a-vis detached housing. So that's causing some gridlock sort of in that move up buying space. So I'm giving you this laundry list of negatives as to why sales will drift lower. So why do we think they're only going to drift lower but remain elevated and not collapse? Well, one of the main reasons is just the sheer demographics of the GTA. So there's 1.5 million millennials aged from 25 to 39 in the GTA, and that's typically when ownership housing demand tends to rise. So there's this huge chunk of people that are just aging into years in which they're starting to demand ownership housing, and that story is not going to go away. Whatever happens, unless there's millions of people that suddenly leave the GTA for whatever reason, which population growth in the GTA is slowed. There's still a huge chunk of people here that are looking for ownership housing. So that's a story that's here to stay. Also, by our estimation, Canadian households are sitting on a mountain of cash. So we calculate that there's about $200 billion in excess savings that Canadian households are sitting on. And so how did that happen? Well, basically, government income supports during the pandemic have been quite robust, and people have kept their jobs, haven't been able to spend on all the goods and services that they normally spend on because they're basically staying at home, and they, bars and restaurants and travel and all that stuff is kind of closed off, right? So there's been this forced saving that's been imposed on Canadian households. So it amounts to about $200 billion, which is huge. Now, this is one of the great wild cards for our outlook, right? We don't necessarily know how this savings is going to be deployed. It could be, some of it just gets continued to be saved, if it's sort of a precautionary measure. It could be that it's some of it is spent so that in areas outside of real estate, so consumption spending, retail trade or whatever is boosted quite rapidly. Some of it could be used to continue to pay down debt. That's what they have been using, and some of it could be funneled into down payments for real estate, right? So needless to say, some of it probably will be put into real estate, and that'll probably boost activity to some extent. And as I mentioned before, I keep reiterating this point, but I think it's an important point. The impact of the pandemic from a jobs perspective has really been concentrated on the lower wage end of the spectrum, younger end of the spectrum, and that has been shielding the real estate industry from the effects of the downturn. So the second round of restrictions that we're currently in will probably have next to no impact on near-term demand for real estate. So that's a good thing. Although it will again, have some implications for the rental market and could potentially, have some negative spillovers to the condo space. We'll have to see. So turning now to the population, this is another factor that we think will be supportive moving forward. So population growth has basically slowed to a crawl in the pandemic because of travel bans and travel fears and border closures and the like. We think that population growth will pick up quite significantly as the year progresses. And vaccines get distributed, widely distributed, not only here but in other advanced economies and some emerging economies as well that tend to travel here, like China. So we think population growth will pick up, and we think that'll underpin rents such that at least they stop falling, maybe they'll stabilize and start increasing, and that'll be positive for condo investors or those who own investment properties, and that'll be beneficial for sales in that space. So turning now to our outlook for prices. So we think that prices are going to continue to rise throughout the year. So each quarter, price levels will be higher than the quarter before. However, the rate of appreciation of prices, how quickly they go up, is going to slow as the year progresses, in our view. So why do we think prices are going to continue to rise? Well, first of all, we have that race for space narrative. There's still a bid, or there's still demand for detached housing, which tends to be more expensive and raises average prices just by definition. Secondly, there's not that much supply out there, as I mentioned mentioned before, particularly in the single detached space. So that, would be fuel for bidding wars and keep prices and would keep prices elevated. Now, why do we think that price growth is going to slow as we progress through the year? Well, it's because we think sales will start to drop. Sales levels will start to drop as the year progresses, and that'll put some downward pressure on the rate of price growth. So that pretty much wraps it up for me. Thank you so much for listening to me this morning. Sorry, I was just not sharing my screen anymore, but thanks so much for listening to me, and I'd be happy to answer any questions that there may be.
So do we have any questions from anybody?
Tim?
Yes.
I'm sorry, I don't know if there's a hand up or you can see me. My apologies.
No, go ahead.
Tim, may I ask Rishi? Rishi, you mentioned about the pandemic and the COVID-19 and all the stuff that's affected some of the clients out there. I have a question for you though. Has TD taken this into consideration for any qualifications for people that have possibly deferred, that have been affected by this? Have they revisited their GDS and TDS ratios that they're going to maybe use for somebody to qualify? Because no fault of their own, maybe laid off, whatever, going,
Yeah,
this is a normal trend. In
sure.
other words, any exceptions you're going to look at.
Yeah. So I can't speak to lending terms in terms of how the lenders have the lenders that work within TD do their business. I'm not a lender. I'm an economist. So I just talk about trends and the like. But I can talk about deferrals, right? So way back when deferrals were a big story. CMHC was saying prices were going to fall by 19% or so, peak to trough because of deferrals. There was this deferral cliff and so on and so forth. It turns out that didn't materialize at all. Most people that took a deferral, almost all people that took a deferral have begun to repay their deferrals. So that suggests that a lot of them have taken them out of an abundance of caution. So that really isn't a huge risk to the price outlook. Also, some industry data that we have basically says that the delinquency rate on these deferrals is only about 2%. So even those that are still in deferral, sorry about that. Even those that are still in deferral, the delinquency rate is quite low, and not every deferral that's delinquent will end up being listed, right? So it's very much a much ado about nothing, that whole deferral story.
I appreciate that. Thank you.
Stavros here in the chat, and he's asking, do you think condo prices will go up?
Yeah, and if I can elaborate on that, I'm saying similar to what happened in 2017. You're saying that crash will likely not happen this time around. Yeah. But because the prices are overinflating again, even though people are moving to the suburbs and condo prices have gone down, do you think those are going to slightly go up later? Because now, just like 17, the houses are too expensive and people will go back to the condo market.
That's an absolutely brilliant observation, I must say. I think that's right. I think I think we've the thing with us is that, and banks everywhere and whatever is that we don't forecast detached versus condo prices. We just don't, because there's just a lack of comprehensive data, and we have a lot of clients to satisfy. It's not just Toronto, it's all over Canada and the US, right? So what we can forecast is constrained by what type of data that we have. So we don't have a holistic breakdown of detached and condo data. That said, we to the best of our ability factor in as much of a detached condo split when it's relevant. And in this, housing market cycle, it's quite relevant, right, for average prices. So we're baking in some shift because of the affordability argument that you're making. We're baking in some shift in average prices lower because of less heat in the detached market and more heat in the condo market, particularly as population growth picks up. We don't foresee that happening in the near term. That might happen in a few months or maybe even the back half of the year.
Yeah, just like last time. Yeah, it's possible. Okay.
No, I would say likely.
From Jackie here in the chat as well. She's asking if there's any data or insight onto how much cash the millennials are sitting on and whether or not it's their own cash or it's cash from parents as well.
No, there's unfortunately there's no data on that. So I wouldn't be able to sort of answer that question. I can't speak to the fact that, as we know, millennials, they need all the help they can get to sort of get into the housing market. And, of course, the bank of mom and dad, they sort of call it, which I'm not a huge fan of that term, but, that's obviously a prominent source of down payments for people that are a little bit younger and trying to get into the market. There is some respite for I would say millennials or people who are younger buyers or first-time home buyers, because they disproportionately tend to buy condos because of affordability, and also because if you're a first-time home buyer, you don't need that much space generally. So although a lot of them are skipping the condos and getting them detached, but generally speaking, the condo space is basically the domain of the first-time home buyer in the GTA, and condo prices have come down quite significantly because the market is oversupplied over the fall. So there's again there was some bargain buying that happened in December, and because the market continues to be oversupplied, there's likely to be some near-term downside to condo prices, just not as near-term. I'm talking like first quarter or something like that. We probably won't see the same pace of declines that we saw over the fall. So there's some respite there for the first-time home buyers. But yeah, no, in terms of how the actual savings are broken down, we don't have insight into that.
Great.
I believe we had one more question from Barry. He might be joining on the mic. We'll see. Are you there, Barry?
Yeah, I'm here. Pierre Elliott Trudeau gave us capital gains in 1971, and it's 50% now. And then one point during the tenure of capital gains, it went up to 75%, then it was brought down again to 50%. Do you think Sockboy will turn around and do it up to 75%, like his father tried to?
I don't think so. I mean, they're trying to like they had the whole income splitting thing and the like before the pandemic hit, right? So now they have an about face, and they have the whole playbook that's pandemic focused. It's more about supporting people and bridging people through the worst of the pandemic. That said, as I mentioned before, there's going to be this extremely elevated debt level that they're going to have to contend with, and one of the ways that they could do that is kind of raise the capital tax. But I can't foresee that taking place. It's possible. They will likely have to look at some kind of range of tax increases, but I'm just not sure, given the scope of the deficit, the deficit and the debt. I don't think that particular lever would bear enough fruit from a revenue perspective for them to really lean on it, but it's certainly possible.
Well, I remember when they didn't think I was working already. I remember when they didn't believe there was ever going to be a capital gains tax at all. But that's one thing. Number two, with $1 trillion plus outstanding or our debt, why would on the foreign markets, why would people buy our dollars? Why would they invest in our bonds? I mean, isn't Canada basically a bankrupt country right now?
No, I would say not. Again, our net debt to GDP ratio, which is the benchmark that not only we look at, but like Moody's and S&P and these credit rating agencies, that's what they look at in terms of trying to gauge sustainability, right? So there's debt and then there's GDP, right? So if our economy starts to grow, that'll have a positive impact on that numerator and denominator. That's the first thing. The second thing is that interest rates are at record lows, right? So that means the interest rates that the governments are paying on their debt are at record lows. And it's interesting because the federal government in their latest budget actually expected debt servicing costs to go down, even though they have such an elevated debt level because interest rates are so low. So that's another thing. The third thing is that, as I mentioned before, we're not as bad as we were in the 90s. We have a better starting point. So it's not as bad from that perspective, but it'll certainly be interesting, the balancing act that the government will have, governments, not only the federal, but the provincial governments will have to undertake. Now, that said, you asked, like, why would people buy our bonds? Well, they continue to buy our bonds, right? So there hasn't been any shortage of bond buying that's been going on in the Canadian market. And that's because all governments around the world are all kind of in the same position. So if you're going to buy a government bond, there's no one standout right now that has an awesome fiscal position. They're all really in a terrible fiscal position, and they're trying to increase their debt loads to support their populations, right? The IMF, International Monetary Fund, is basically saying, okay, this is the time to, because interest rates are so low, this is the time to pile on the debt to support your populations and grow your way out of this problem, right? The Federal Reserve, or sorry, the U.S. Treasury Secretary Janet Yellen, she used to be the chair of the Federal Reserve. She's basically saying the same thing. She's saying now that strike while the iron's hot. The Federal Reserve Chairman Jay Powell saying strike while the iron's hot. Interest rates are low. Pile on that debt, right? So, Canada is not in a unique position, and arguably is even in a better position than it was during the fiscal crisis in the 90s because the interest rates are so low.
In the 90s, you couldn't sell our bonds. They had trouble overseas selling Canada.
That was in the 90s, but
Yeah.
now there isn't that same problem because again, governments around the world are all in the same situation. So if you're an investor, it's basically I'm searching for an analogy here, but you're looking for the least bad out of a bad situation if you're going for government bonds, and Canada is around among the least bad.
Wow. Okay.
Thank you. So, Rishi, once again, thank you very much. For everybody who is here with us today, I want to just say that Rishi and I have not talked before this event. And the reason why we did not talk, aside from confirming the time and the date, is because I have my own analysis after. And some of the points that he made are actually completely in line with what I believe as well. So I want to really thank you very much for your time today. Always great having you as a partner. And I just want to wish you continued great health and a great year ahead for 2021. Thank you for being here.
Thank you so much. Thanks, everybody. Have a great day.
You too. So we're going to continue on right now with another special guest that we have. His name is Doug Devitre. Doug and I met around 7 years ago at an industry event through my, through my industry volunteerism, and we created a bond that, he loves Toronto, even though he's from Missouri. He loves Toronto. Whenever he visits Toronto for anything, for a speaking engagement or anything else, he'll always make a point of letting me know in advance so we can enjoy a coffee together. And we just did that just before the pandemic as well. So super excited to have Doug. I want to say a little bit about Doug, if everybody doesn't mind. Doug brings, again, he's from St. Louis, Missouri, and organizations want to bring him in when they want to dramatically increase operational performance, create breakthrough value propositions, and serve customers beyond geographical constraints on a minimal budget. For more than a decade, he has been setting trends with how organizations engage customers with social media, video marketing, and now voice assistant like Amazon Alexa. Doug's book, Screen to Screen Selling, published by McGraw-Hill in 2015, pioneered the way real estate agents have been able to sell homes without physically being present. He is one of a select few who've earned a certified speaking professional designation from the National Speakers Association and has practical real estate experience as a realtor. Would you please all give our friend Doug a round of applause virtually? Doug, welcome to our event and excited to have you here. Are you there?
Hey, Tim, thanks so much for inviting me. I'm so excited. I always get geared up to these, whether I'm in person or not. So I just want to share with you my sincere appreciation for our relationship as we get to share some of these new ideas with your company. So how's everybody doing? What I'd like for you to do is, this is going to be interactive, right? This is going to be a little bit different from some of the other sessions you've sat in before. So maybe just in the meantime, type in your name. Maybe it's your realtor website. If there's a listing on Matterport you want us to look at or pop up, type something in the participant chat to at least introduce yourself. Yeah, as we kind of move forward. Now, I want to take you on a little bit of a spin, right? Because it was in 2016, I delivered a presentation for the Canadian Society of Association Executives, right? Executives from all over Canada, and screen-to-screen selling was the topic, right? And I'll never forget, towards the end of the presentation, a woman from Air Canada, I think she was the senior vice president of travel, booking corporate travel, and she stands up, she says, Doug, what you're saying is that you don't want people to fly anymore, right? I was like, no. What happens if you can't get an airplane, right? What happens if if the weather is bad? What happens if your customer is international or relocating from out of town? So, and Tim was right. You know, there's a real book, right? This is a real book. You know, what's a real book is when you throw it at somebody, it actually hurts, right? Like this is a real. So, you can pick up the copy now, or you can wait for the new version that's going to be updated for 2021, because I'm going to share with you all like what's behind the hood, right? What was the motivation for some of these things? And so think about this for a minute, right? So this is my son. And he is into this new game called Minecraft. Do you guys have kids that are playing Minecraft right now? Now, I wasn't a gamer like this, but I was so into seeing how he was gravitating towards this. And think about this: he's taking Zoom in kindergarten, right? Not by my choice, but that's what he has to do. And so, from thinking about some of the skills he's learned from the computer and learning how he's using on Minecraft, this is going to blow you away, right? This is going to get technical here in a second, real estate specific in a second, but I want to share this is like the future of where we're heading, right? So when you think about, this is my son building a virtual world in Minecraft. And then now he's getting into Python, which is a programming language, to run a script to start to build some of these virtual worlds, right? And then you start to think about, okay, if I need to check up on my son, I can do it directly through the Amazon Echo Show. So this camera, like you see, these are the blue light glasses he has on, right? And you kind of wonder, like, what's his influence? If he's 5 right now, what's his influence? And this is who it is. This is a guy named Preston Plays, right? So this is all he talks about is Preston Plays. And keep in mind, Minecraft, there's 30 million users worldwide of Minecraft, right? 30 million users. And this guy named Preston Plays, he keeps talking. So I searched for him, right? I was like, who is this guy? And then I started to say, okay, well, video wise, right? Like, does he have any videos? So yes, he has his own YouTube channel. And when you start to look at how many subscribers he has 9 million subscribers to his YouTube channel. His last video that was 20 hours ago, do you see this down here? This last video was he had 653,000 views. I mean, is that crazy or what? So when you think about, okay, if I get a new listing and I'm going to go live, how many people can I potentially reach on a minimal budget, right? Whether if it's a new listing or if it's a new neighborhood or subdivision, you know, how do you get the word out? This is kind of where this is heading as far as marketing goes. So I'm super excited to kind of be here and share some of these exciting trends with you on how you can show up inside of your virtual camera, right? So right now, like as I'm looking at you, we have this virtual camera, right? So how you show up inside of your virtual camera is going to really determine a lot of things, right? And specific examples. And even through, as we're doing this program live, right? We're doing this program live. We're also going to record it. So if you want to go back and watch it, you have the ability to do that. And then also, as of just this morning, I have been creating this blog post, which, you know, Tim didn't ask me to do this, but I wanted to at least outline some of the key points, is 8 ways to be able to show up differently inside of Zoom. And so even if Zoom isn't your favorite tool, right? Even if, let's say you want to do a lot of Facebook Live, or let's say you do LinkedIn Live, or you do YouTube Live, or you're just having a one-on-one meeting, right? You have ability to totally change the way that you show up. And I can give you a lot of different examples. So, you know, thank you, Jacqueline, for being here. I'm going to check out your listing with Matterport here in a second. That's going to be really excited. So cool. We're going to kind of move forward, and please, if anybody has any questions with regards to like what I'm doing, feel free to type it in the participant chat, and we'll kind of move forward. Now, what I'm doing right now is I'm actually pulling up this digital whiteboard that I can draw on, and you have the ability to do the same thing here too. But what I wanted to show you is kind of like a lot of mistakes on, well, at least what I see, when people get started using this type of technology. And then you can either kind of relate or say, yeah, I've done that before, or maybe you're doing it and you haven't like, nobody's told you, right? that you've been showing up like this. Like right now, I'll show this one right here at the very bottom. Like how many of you love technology? Like you love this. And this is like, and or maybe you make a ton of mistakes and you just hate it, right? And think about this right here. This is how you show up when you're looking at customers, right? Like do I look like someone in that square that you want to do business with? I guess not. Or right up here, you'll see here where the camera is kind of elevated up. So all you see is the ceiling. And what's funny is some people who have ceiling fans, it kind of looks like they're from outer space because the ceiling fan's kind of like rotating around their head. Here's another one too, comes up quite a bit, is when people share their screen, they're not zoomed in enough to see kind of what's on the screen, right? And what's making this a lot more difficult now is that people are joining these Zoom meetings from their mobile phone. So we need to have an awareness of what people are seeing on the other side, so then that way we can really connect, right? Like, communication isn't just saying, it's listening. So again, like there's going to be some things you do here, and there's going to be some things that you don't do. But what I do want to do is really like acknowledge where you are in this process, right? Like if you're just starting out, it's okay. If you've been a master of technology or you love this stuff, great, you can get better. So just understand, like my triathlon coach says, Doug, run the mile that you're in. If you get so worried about, mile 20 when you're supposed to be focused on mile 2, you're going to totally get overwhelmed and you're going to crash and burn early. So anything, run the mile that you're in. And I have a ton of these examples that I'm going to share with you to really like help you set the next trend. So what you'll see with this number 1 here on sharing your screen, notice that I don't have to ask Tim for the permission to share my screen. This just appears as my own virtual background. So even if, and like your view, if you have your view set up as the Brady Bunch view where everybody's kind of like stacked on top of one another, you might even want to move to the presenter view. So where it's kind of like focused on the main screen there. But I don't have to ask for some permission to be able to do that. And how I do that is by implementing what's called a virtual camera, right? So if there's anything you want to do, like for next year, think about considering getting a virtual camera to change how you show up on your square. Because when I go back and forth and transition through different scenes, like I've already anticipated what screen I want to share ahead of time, and I'm able to create a very dynamic experience without having to ask for somebody else to for permission to share the screen. Also, something here too, and I've been demonstrating this, is showing a website as a virtual background, right? And one of the things that I love, I'm going to Remax Ultimate. What I love about this new website that Tim has for you all is that, oh, that's not it. Sorry, that's the... What I love about this website that Tim has for y'all is it's super easy to use and it's super web friendly. So what I mean by that is that, like, if you're using this on a mobile device, or you're using this on an iPad, or you're using this on the television, right? This is going to be very easy for you to be able to pull up information because it's just easier to use. And so what you're seeing now is this website is my virtual background that I want to talk about, right? Either one-on-one with a customer, or if I decide to go live, I have the ability to walk anybody through anything, right? It could be Economist report. It could be a CMA that you've just created. It could be a Matterport tour. So I think, where's this? Let's see if I can copy this. This will let me do it. No. I'm going to type in this. Jacqueline Ross inside of the participant chat had shared with me her websites to this property, and I'm just going to type it in so you can, this is going to blow you away, right? ML. I think I spelled that right. Sometimes it's kind of hard to copy and paste from the participant chat. I'm not able to get it up, so I'm sorry, but I'm just gonna show another one as an example. And I think the reason why I'm just having that issue is that inside of the Zoom settings, you can make it to where somebody can copy and paste what's inside the participant chat. So right now, here's an example of this Matterport tour, right? Because it's a website, and now I can walk somebody through the property and I can talk about it. Like, if you think this is cool, type cool in the participant chat. Now, I didn't have to spend hours hiring some sort of designer to create this for me. It's already been built as an asset that I've already invested in. So when you look at the repository of websites that you want to use on a regular basis with customers, think about adding them as a virtual background for live video or recorded. I mean, just like you would set an open house, right? Or people are doing live virtual open houses. Instead of driving there, right? Instead of driving out to the property, now you can have multiple open houses without ever leaving your own house. Now, granted, you might say, well, Doug, at some point, someone's going to have to come and see the property. And I'd say yes, but at very least, you're getting more exposure for yourself, for the property to be able to generate leads and so forth. And something I'd also encourage you to do is Tim and I last week, was it? We recorded an interview on how to secure more listings without being physically present. So look out for that inside of your, I guess your company intranet, your library, so you can see what, like more specifically what that looks like. Now, this third one where I'm using a digital whiteboard. Think about this. Like, you have the opportunity to insert anything you want on the screen back of the napkin, right? Think about that. And you've probably done this at Tim Hortons. You've probably done this before on the back of somebody's car, where you've actually summarized, right? Financials, whatever. So sometimes I just draw this because I got to ensure people are can actually see that I'm writing on it, right? Have you ever done this before, where you think you're sharing your screen or not, and you're not? To me, it happens all the time. So I at least kind of have to set that in my head. Okay, can people actually see what I'm doing? And then also, when you think about images, you probably already have visuals inside of your visuals that are saved into your computer that can be used as templates for a future conversation. And I'll show you an example of what I mean by that. So this right here, this is an example of a template, right? That I can now describe a process. The app that I have on my computer is called Doceri. It's an iPad app, and that's just connected. It's an iPad app that's downloaded onto my tablet, and it's also downloaded on my computer. Well, I think, what is it for, let's say $30? I have this app connecting to my computer. So now it acts as a digital background whenever I get into desktop screen share mode in my virtual camera. Now, if you didn't know what I just said, right? Like, if you didn't get that the first time, just like, right? It's a lot. And I think one of the things we can do after this video is we can create a transcript for that. And you'll be able to create one too, also with a lot of the different tools you have. So think about adding a digital whiteboard to this. Now, I also have sounds and effects that I can play at any time, right? And when you think, and you've already heard some of those, I kind of have like the whole purpose of this, of adding sound, is just to make this more fun, right? You know, how many Zoom meetings have you jumped on where it's just kind of like, when is this going to get started? This is just like another one, and it's not any fun. So I'll even show you what this thing looks like as far as sound effects goes. I have a little camera that I can kind of move around. This kind of sits on my desk. This is a soundboard. It's a Rodecaster Pro. It's about $600, which is kind of professional grade equipment, right? So if I press this button, this is the intro music. Right? If it's Tim's joke, if it's my joke, if it's getting the program started or the meeting started, or, I mean, think about this. Think about every Zoom meeting. You're like, yes, I'm so excited to talk to you. Or, goodbye. This has been such a great conversation today. I wish you the best. Like, this totally changes the game. So this not only works for Zoom meetings, but this also works from phone calls from your mobile phone, because see this little button, it's a little Bluetooth piece that ties into the soundboard to your phone. Risk management, a one-off. Anybody there? So you kind of see those just as kind of different examples for this. So you might not use any one of these. What I am curious about, though, is if you type in the participant chat right now, from the things that I've shared with you, what's something realistic that you would implement right away, right? Or what are you afraid of that has been holding you back? You see, like, there was times for me when I just didn't feel good about myself, right? And I didn't have the self-esteem or the confidence to be able to like get in front of a camera and be able to talk to people, right? Like sometimes a lot of it's more about the psychology than the technology itself. So if you can find ways to push yourself, or maybe you have a team that kind of hold you accountable to try some of these new things, you're going to be a lot better off in the future. Cool, Andre. I'm glad you like the virtual background, or the virtual whiteboard. Lisa says the difficulty of sharing the white screen. I'm not sure if it's on your computer. Well, the thing is, Lisa, is when I have this app, and it's an iPad app. Now, there might be one for Android too, but it's called Doceri. This is the tool. This is kind of the tool or the app that I have to use to act as my virtual whiteboard. Now, here's the thing. There are features inside of the video platform like Zoom and Teams that have the annotations where you can draw on that. So keep in mind, you can still use that. What I like about Doceri is gives me the flexibility to use it with every platform, and I only have to learn one digital whiteboard as opposed to like 10, because it seems like every day there's a new video meeting tool that's coming out. So something also like let's say that okay, let's do number 5. Show a slide presentation as a virtual background. Now let's pretend the Economist shared his slides, right? Now, how would the Economist typically share his slides, or anybody share their slides after a presentation? You might use a tool called SlideShare, right? So I'm just going to use this as an example where I upload a PowerPoint presentation. This is the web URL for the presentation. And now I can go into full screen mode and I can deliver this presentation. Now, if the Economist gave permission for us to be able to use the slides in a video type of presentation, right? And that's the key thing, is getting permission to use somebody's slides. Now you can use a slide presentation as a narration where it's kind of inside of the virtual background. So that's totally possible. SlideShare is free. If you like free, say free. Yes, a lot of these tools are free. I would say probably the biggest investment for creating a setup like this is going to be the Rodecaster Pro. the virtual camera. Now there's again, you keep in mind, there's a ton of different options from free to like professional broadcast. We just need to show up, right? We just need to kind of like, make it happen. Now, number 6, this is replace yourself with a pre-recorded video. Now think about this. I think Tim even showed this earlier where we played the countdown video, right? Now you might have a countdown video, or you might have another video that you want to use during a meeting. I'll show you a couple different examples here of countdowns. Now, if I wanted to play, let's say, a Korea ad, Korea gave, I got permission to use this.
Mid-century modern detached. Lots of room for a doll family of 4. This is a great water feature, but what's the upkeep like? The previous owner clearly had a problem with grape juice spillage, but other than that, it's in good condition.
So I didn't have to right? I didn't have to exit out of the meeting and go into screen share to then go to YouTube to then do that. All I had to do was push a button, and now I can play the video full screen with the audio included. So that is an option for yourself too. Now, the next one, number 7, is adding video as a virtual background. Now, you'd probably think, okay, what videos am I going to use? Do I have to hire a professional videographer and editor in order to create a video as my background? And I'm going to say, no, if that's what you're thinking, I'm not saying that at all. If I press one button on here, now I can, and I want to talk about searching from homes for sale. I already have a video that's created by the brand that I can now load in, and I can customize it to put my name on it, my title. And so as people are talking, right, they can now see this. And then if I say, okay, you want to do a search together? Great. Now I press one more button, and now boom. And I say, I need an audio effect that's boom, right? I press one button. Now it shrinks me, puts me off in the corner, right? It pulls up the specific website that I want people to go to, and now I can have a conversation with them. And then when it's time to back out, I kind of go out. But what I'm trying to share with you is that you already have the assets that the brand has created for you. Use them, right? Use them in a different way. How many agents are in your office? 200. How do you stand out? Use what you already have, but own it in your own special, unique way. I think that'll serve you pretty well moving forward. Now, the last thing I'll kind of share with you today, and it seems pretty simple, but it can be often overlooked, is participant chat templates. I don't know how many times that you have, and I'll show this just for reinforcement, participant chat templates. Like how many times, have you typed in the same thing in a Zoom meeting to say hello or to sign off or to engage somebody? Probably happens quite a bit. So maybe you have a Google Doc that's prepared with some chat templates. So that way, when it's time to have the Zoom meeting, you can just copy and paste the text rather than having to type it in, each time. So, I mean, gosh, we've covered, we've covered kind of a lot. Like so far, one of the things that I think that kind of like limits people when they're getting started is their internet speed, or even like just the time to task to be able to do things with technology. So if I were going to ask you a question here, how quickly can you find out the internet speed of your computer right now? So think about that. Think about the question I just asked. How quickly can you share with us the speed of your internet connection? What I want you to do is I want you to copy this. I want you to type in the speed of the internet connection in your participant chat. Ready, set, go. Now, if I had some sort of music that would kind of like be kind of the waiting music, this is, so here we've got Gary 150, we've got Jeff with 600. So think about time to task. Some people are going to be able to find it really quickly. Others are going to say, well, gosh, I don't know, do we got to call IT? The way I have this set up is in here is if I press, one button, or if I open up my web demo mode, on here, and then I go into this website called fast.com. Now it's just going to pull this up. And so, when relationships kind of start to go sour, right? And then you start to say to yourself, it wasn't you, it was me, right? And we have these Zoom meetings where there's an internet delay, and you have to wonder, is it you or is it me, right? So see how now it's like obvious to everyone. And well, 200 megabytes. I at least want a 30 megabyte speed internet connection before I hop on one of these, because I don't want to be that the excuse, just like your tire, you got a flat on the side of the road. I don't want the internet connection to be an excuse, moving forward. You might say, well, Doug, this seems like it's a lot, or maybe it's too much. I'll give you one simple thing, and then I'm going to wrap up. It was actually the title of my blog post I wrote this morning, and I really do encourage you to go to that blog, because I'm constantly putting out videos, very helpful, like step-by-step, or lists, or reasons, or excuses. Some of it's text, some of it's strategy. I just kind of continue to do that. But let's pretend we've got another website, right? Let's open up this website, right? And then somebody says, well, gosh, I wish I could. Somebody asks me how to search for homes for sale in Toronto, right? Now, you probably would use you would use your Remax website, right? You wouldn't use a third-party website. You would use your own company branded website, because you're trying to reinforce the brand. So if you want to create a video to share with somebody, like, how would you record a video of what's on your screen, and how quickly can you share it with somebody if they have a question? Now, you might say, well, Doug, I have to contact IT to record a video, or I don't have any money to be able to invest in any equipment. And I'd say, this is like where, I don't know, it starts to get really special and like emotional for me and for you, is this is going to this will start to change the way that you approach customers, just like you approach phone calls, in-person meetings. This is kind of the asynchronous way of staying in touch. So do you see this little button here? It's hard to see, but see where my mouse is at the top? I'm going to click this button, and this is where I can start to record a video. And you'll see in here, I've got my microphone is the Rodecaster Pro. I've got my virtual cam connected, and now I'm just going to click Start Record. And I'm actually in the screen. Click this screen. Now I'm going to share this video after I'm done recording it. Hey everyone, this is Doug with Remax Ultimate, and I want to share with you one of the greatest listings we have in Toronto. Now I'd probably come up with a little bit better script right off the fly, and I probably wouldn't do Toronto, Ontario. Now here's the thing: is do you notice I'm recording too? I don't know if it'll let me search for homes. This is interesting, right? If I want to move down to Toronto, Ontario, I think I spelled it right. I don't know. Regardless, let's say what I did was perfect. I clicked the same button to stop recording. See that? I clicked one button to start, click the same one to stop. Now, here's the recording. I'm going to copy and paste this and put this in the participant chat of a video of me just totally botching it, right? Now, I'm not gonna share that on social media, and I ask that you not either, But notice, I mean, how this is 42 seconds it took me to create this video. If I didn't do a good job, guess what? I'm gonna re-record, because it's not like I had to go through a bunch of effort in order to be able to do this. And I say, Doug, well, how much is Loom? It's free. It's free. If you like free, type it free in the participant chat. Like, I want to know you guys are looking for, you don't have to spend a bunch of money doing this. And here's my kind of also, this is kind of more just my feelings or observations. It seems like more people are selling technology today than there are people selling real estate. You know, can anybody, I don't know if anybody else agrees with that, but so like, you don't have to spend a fortune. You can find free, easy tools. This is a tool, Loom, I use to, you can even download the video and then upload it to my YouTube channel later. So these are the trends, guys. This is not going away. Like, I don't suspect that you're going to be like Preston Plays and within a couple of years have 9 million YouTube subscribers, right? Run the mile that you're in. And I'm just so grateful to have this opportunity to share some of these ideas. I know we can take some questions in the participant chat if you'd like. Tim, I don't know if you had any comments.
Yeah, no, I just wanted to jump in here and thank you so much. I mean, the whole idea of having Doug join us is to just kind of stretch the thinking of everybody. And you know, part of my conversation after you're gone, Doug, after this part, is to comment on some of these things in some of my own personal studies that I won't, you know, share now because it kind of takes away from my presentation. But I also want to share with everybody that if you have any questions about some of the tools and services that Doug has, you know, please ask me. I have the stream box. I have a green screen behind me now. I have a light on my desk right now. These are things that I learned in the past week, and some of the things we're already doing are being implemented. And I'll share with you a little bit later some of the things and how easy it is and how to connect you as well, Doug. So I want to thank you.
Yeah, and can I share one comment? Right, this is going to rewind 10 years ago. I spoke at Realtor Quest. I don't know if you've ever been to Realtor Quest, but I spoke at Realtor Quest, right? And I said, hey, everybody, raise your hand if you have a YouTube channel, right? Raise your hand if you have a YouTube channel. There's only like 1 out of 10 people did. And so if you really want to differentiate yourself, just get started, do one thing. I don't know, Tim will help you get there. So thanks again.
Yeah, thank you so much. So I'm not sure if anybody has any questions, but by all means, we can just to keep things moving along. Is that okay with you, Doug? We're gonna continue to move forward. And I want to thank you so much for doing what you did with us here today. So welcome back. This is the last phase of the meeting. I'm going to share some of my insights of the year that was, and go from there. I have a quote I want to start with everybody, and that is: start by doing the necessary, then we do what is possible, and suddenly we're doing the impossible. And this exemplifies, our year last year and the way we collectively came together, and we really pushed each other, and we're such a positive light in the industry. I just can't thank you enough for following the rules, whether we agree with them or not. It was very, very challenging. You think about where we were even a year ago. We were talking about a 2020 vision. We were talking about a housing market that had limited supply. We were talking about a promising year, a decade ahead. Just to remind everybody, 2020 was a year for me that I shared on stage that included our youngest turning 10, our middle daughter turning 16, our eldest daughter turning 18, who graduated, by the way, from high school and had her first year of university at the University of Toronto. We celebrated 10 years in our home together when we moved. We've also celebrated our 20-year wedding anniversary, and I turned 50 last year. And Remax Ultimate turned 35. And the reason why I'm reminding everybody is because I shared with everybody on the stage just what kind of a year it was going to be. And it was. Nothing was taken away from that year. Yes, it was very different, but you can't defer those memories. And everything, stayed with us. I also discussed with everybody the importance of data, and that it's no longer about data that we have to concern ourselves with the consumer. It's about our database. And we've also discussed just how quickly technology is evolving and the human tendencies that are actually changing. What has happened through our 2020 vision that we had last year is like serendipity to me. The reality is that everything that we discussed on stage a year ago together, and that picture is something that I can't wait to have together, all of us together, enjoying a breakfast, a lunch, being on stage, just hugging would be great too, is something that we're looking forward to. But what really happened is a lot of the things that we discussed, and if you go back to the recording that we have on YouTube and some of the slides that we had, everything just kind of happened, but came together a lot quicker. The one thing that Rishi said last year on stage is that this is something that's going to be a recovery from Asia, from China. You know, it's being impacted. Nobody really we all underestimated just, how it traveled by airplane and came here, and how it just spread through the entire planet, and how it was. And it was literally yesterday was a 1-year anniversary from having the first case in Canada. So it's quite timely. So what did we learn? I myself want to share with you that I learned how to cut my own hair. That's one of the things that I want to share with you. If you look closely at my head, I gave myself another haircut. I haven't gone to a barber or hairdresser since March of last year. A lot of people can't believe that I'm able to do it by myself. I will go back. This is not because I'm trying to save money. It's because I haven't been able to go. So I became very resourceful. But what we also did learn about together is how we need to chart our course. And that's the theme of our meeting today, is charting the course. We charted the course through 2020. Now we're turning the course into 2022 and 2025. I had a meeting recently with our staff that I'm going to actually bring and share with you as well about charting the course for the future. But what did we learn about our own business? How do we approach our own industry? What have other business taught us? And then we finally realized that change is not an event. Change is a constant. We need to continuously embrace it. And I'll remind you, when I became the broker of Remax Ultimate, the card that Mary gave me on the eve of me announcing me being the broker of record, here is, don't be afraid of change, be afraid of not changing. And I still have that card in my bookcase. And that card is sitting, every time the bookcase light turns on, it shines really brightly. And it almost reminds me on a nightly basis in our family room that we have to continuously always be open. So we also learned that expectations have changed. We are being influenced by other industries, and how are you spoken to? That changes us. What are your expectations as a consumer? And are we living in a double standard? And I want to share with you what that means. It's extremely important that I share that with you. When you call Rogers or Bell, if you call the Bay, Nordstrom's, anybody online, any service provider, how are you being spoken to? Because you are a consumer. And as a consumer, you're being influenced with what your expectations become. And that double standard idea is how we need to realize that not just, how the way we're being spoken to is how you're also expecting it back and what you have to deliver. So at the end of every conversation, thank you for choosing Apple, thank you for choosing Rogers, thank you for choosing Bell, thank you for for your support at the Bay or Nordstrom's. All these things are a direct impact on the way you live your life and what you expect. Don't ever underestimate or forget that because you're expecting it, that your consumers are expecting it of you. Technology in our mindset over the last year has changed from store hours to open now. So store hours is because, you used to actually get into your automobile or transit and walk into a store, and you would expect somebody to be open from 9 o'clock till 5 p.m. Well, now we don't have that expectation anymore. Our mind has adapted to some degree where we don't have that same expectation to think that things are hard set. So we need to also evolve and realize that, you're using the internet and you're using platforms to try to get on to see if there's somebody available to answer your question. So these things kind of come through. And I want to share some important stats of the pandemic. For all of you, you know me very well by now. I'm a student of the marketplace, and I'm always analyzing what's going on around us and beyond real estate, because I believe that's, as I said before, that's what impacts us a great deal. 44% want their shipping done as quickly as possible. So I want you to understand that sometimes people will compromise certain things or go to somebody else or go to a different store just because the deliverable is done a lot quicker. So this is a heightened awareness that we have to have. 43% want more visibility in the sharing of their inventory. This data access helps them make a decision. 48% of Canadians search absolutely everything. So I'm one of those people with my family. We're watching a movie and we see a couple of actors, and my daughter will say, "Oh, Dad, when was that movie actually made? What's that actor doing?" And we'll actually search and find out they're alive, they're dead, their net worth, silly as it sounds, who they've married to, who they divorced, how many kids they have. You click on their kids and their kids, and you're actually doing all this information searching for what? Just because somebody asked you when this movie was made. So a lot of people want information, and 91% of people look to see how much info there is on any single product before buying or selling. They want to be more descriptive. Yesterday, I received an actual Google notification from one of our agents who showed me the pictures of the interior of the house. And there weren't just 6 pictures. There weren't just 12 pictures. There weren't just 20 pictures. I couldn't count how many pictures there were. There were angles from every room had different angles, up, down, sideways. The lighting was done a certain way. The drapes were open a certain way. It was the pictures were so descriptive, and they were using every single possible way of highlighting that information for the people. So 91%, think about it. We're almost close to clipping 100% are over researching and over analyzing before doing anything. So artificial intelligence, it leads me to that next conversation. In 2020 on stage, I talked about how Remax has a new program called First.io, where your database is more important than data, where this entry of your database on this app, which is, by the way, still in the States, it's starting to migrate its way into Canada. It's not quite here yet, but I remember seeing your jaws drop when I was on stage, where you upload your database into this app. And what happens is with artificial intelligence, it tells you who is more closer to making a move based on their travels, based on their commutes, based on their searching on the internet. And you ask, how is that possible? Well, if you saw the picture earlier, I was holding up my phone, and I said that your phone is the most powerful item that's in your arsenal. You don't have to worry about the vaccine to be followed. I always joked about this through 2020 when the vaccine comes. Oh my God, I don't want the vaccine because I'm going to be, it's a conspiracy. I'm going to be followed around. And my response has always been, this device goes into the worst places in your bedroom, in your house with you. It goes into the washroom with you. And if you actually grunt a little bit harder, you get an ad for Dukalax or something like that. It's listening all the time. And as crude as that sounds, I'm just being real with each other that that's the most powerful thing. It knows when you're looking for a home in North York, but yet for some reason you're using other search engines to search in Milton or Durham. And there are apps and databases that are artificial intelligence that's going to use that information and is using that information today on 350 million people south of the border that are going to actually tell you who is going to be more open to buying or selling. Very, very scary. Recently, I had a bottle of wine. I had my Google app on my iPhone opened. I took a picture of the wine. I wanted to see what the stock inventory is at LCBO so I can buy it. It was lovely. And it told me every review. It told me, for some strange reason, it gave me what other stores, where you can buy, other suppliers that are offering it. And just to test it, I went to another product. I went to a tech product, and I'll tell you what it was. It was actually like my microphone that I use for my computer. And I took a picture of that, and it told me Amazon, eBay. It told me all the places that had it available based on inventory, how fast it would come, based on all the reviews. So it's actually so smart that it's actually trying to change things. And it even goes down to my next slide. It talks about your home shopping and real estate. So when you're looking at your home shopping and real estate, I want to share with you that you're looking for a 3-bedroom, and you're looking for it to be with a double car garage. But artificial intelligence is going to actually send you 4 other homes that have a single garage and are semi but have 5 bedrooms, because it's in your price point. And that's where things are actually changing and what's actually happening. So what I'm trying to do is, with Doug being here, I'm trying to stretch our thinking and give you opportunities to think in different ways. Did you know that you've already adapted? This is going to kind of give you something in your mind right now that you've never thought of. Do you still believe after the pandemic that you have to touch something to buy it? Do you really believe that? I'm going to tell you that you don't. And yesterday I demonstrated that with Larry in the office. I was wearing a brand new pair of boots that I bought for $75. And I bought them online and they're absolutely gorgeous. Like Larry said, oh my God, where'd you buy those from? And I'm going to tell you that I touched my screen so many times and I flipped them around and looked at them in so many different ways that my brain believed that I actually touched that boot. And I bought that boot. And it was delivered to me quickly, and it was exactly what I thought it would be. So the moral of the story is not that I spent $75, I got a good deal on these really good boots. The moral of the story is that my fingertips created a sensory reaction in my brain that made me buy those boots without going to a store and buying them. So screen-to-screen selling is no longer impossible, is it? Because you can actually create the sensory, your brain, whether you like to admit it or not, your brain has already adapted and gone further than you actually are willing to accept. Here's a study that's going to really shock you. Last week, I called and one of our agents sent me a text message. And I actually said, can I call you? And they said, yes. And I FaceTimed them. And they were really surprised that I FaceTimed them. But they answered, and I'm sure they answered because they were dressed appropriately, they were on the road, and they were okay with with them actually accepting a FaceTime. So I FaceTimed them, and the phone was in my car, and we talked. And then we hung up because I answered their question. And here's the power of the study. I called the agent 2 days later, and I asked them, when were we together last? And there was silence. Little dog, head tilt, I can feel it happening. I can feel it happening through the voice, right? Silence. And I said, we weren't together, were we? And the agent said, oh my God, I was going to answer that we were just together a couple of days ago. So what I'm trying to say to you are two things. A, don't underestimate where our minds are compared to what we're willing to accept. And B, use these tools in a way that people are already willing to accept. Doug said earlier that 10 years ago at Realtor Quest, he asked how many people have a YouTube video, and one hand went up. And I'm willing to say to you that if he was at the same Realtor Quest YouTube account and video, 10 years later, I'm willing to bet that if he was at Realtor Quest and he asked the same question, I'm willing to bet that it wouldn't be just one hand, but it wouldn't be 1,000 either. Because people are not willing to get there, be there. But guess where everybody else is? They're there, right? They're already there. So we'll say that 25 or 30%. So we've gone from email to text. And then from text, we decided to do BombBomb, where we record a video of ourselves and we send it to somebody. Wait a minute. We've gone to video to text to BombBomb, or we've gone to video text, to doing Zoom. Why not go from video to text to going to FaceTime or WhatsApp and communicating with people face to face while you're walking on the sidewalk? Not while you're driving. That's dangerous. I'd never want you to do it when you're driving. But why can't you be on a lunch break or somewhere else and actually FaceTime somebody? They say that, maybe you should be asking permission to do that. Hey, got your text. Do you mind if I FaceTime you or WhatsApp? What do you prefer? Surprise your client, surprise your family member, do it with your wife first, or your partner, your friends. Try it like that and see what happens. I'm willing to bet that our minds have gone a lot further, and your mind has already accepted this way before you think you're ready to do it. So why am I bringing this up? Because indecision to start moving forward will cost you. Winston Churchill once said that a decision is like a long road of agony, right? So more failure is caused by indecision over the wrong decision. adapting and moving forward and trying new things is actually not the wrong decision. It's an indecision that freezes you. And you have to ask yourself that in 1 year, 3 years, or 5 years from now, will you wish you had, or will you wish you hadn't? My biggest goal, everybody, is to push you to think differently. I'm not asking you or judging you or telling you what to do. I'm just from my heart trying to find ways to make you think outside of the box. I am a student of each and every single one of you. I learn from you every single day. And I'm also your coach and mentor sometimes for some of you who come and call me at any time, as you call Larry as well, and you call Diana, you call Rebecca, you call Nikki, you call Mary. We're all here to help you, guide you, and get you further ahead. But pushing the envelope to me is very, very important because it makes you think. And the last thing I want you to do is think that, or believe, not think, believe that the industry or the world is not ready. They're way ahead of us right now. They're already doing things, but we just got to take those and use them. So now that everyone is doing Zoom, as Doug said, how will you differentiate yourself? How will you be different? And remember, I said this back during the pandemic, fear is the most incompetent teacher. Fear is the most incompetent teacher. Don't learn and don't let fear be your teacher of anything that you want to do. Doug earlier, he blundered that Loom video like really badly, but you can just continue, and we joked about it, but all you have to do, as he did, is poke fun at yourself. Record it over and over and over again. And when you feel comfortable with it, just send it to somebody, right? Imagine doing a video of a house through Loom, or showing people how to log in to a service that you're providing by sharing this. I mean, I'm thinking about Loom saying, how about us teaching you how to log into Transaction Desk by recording yourselves with Loom, or us teaching you how to use our mobile app that we've had for 5 months that is starting to gain steam and get leads for you, right? How can you use it to have one of your clients choose you as the agent of choice so you can watch everything they're doing? How can you present this by sending a quick video to any of your clients of your value-added services by using Loom? It's endless, but you have to start with baby steps. And once the decision is made, Winston Churchill said, the agony goes away. So I broke up the quote into 2 parts. The long road of indecision is the long road of agony. And once the decision is made, the agony goes away. So you got to start. So with all that, I want to talk about 2021 and moving forward. And I want to say, be careful of the noise. And we've talked about this many times on stage or in person. There's no golden spoon here. I remember quite clearly being a 12-year-old with my family, hardworking parents, God bless them, I love them, who weren't able to have furniture on our main floor. We lived in a bungalow and we had no furniture until what was about the age of 12. So that gives you an idea of the hard work and everything that I've bared witness to. But something that I learned when I was 18 years old was how important it is to believe in yourself. And I want to share this slide. I'm going to talk about it, okay? Be careful of the noise. The American election is over. Now what? Who takes credit for your success? Who do you think? So we spend so much time worrying about Donald Trump or Joe Biden and everything else. And yes, there are policy decisions that are made that affect the whole world. And we don't want, to have a leader who can create a world war. At the same time, I want to keep things in perspective and know that it's up to you. You are the person, and you should never wait for anybody else to create your success. In 1988, the Conservatives took office. That's the year I started my real estate career. That's the year I took my course. I was done in 1989. So maybe I should be thanking them, for actually, me choosing to become a real estate agent. In 1993, the Liberals won. So I decided, hey, if the Liberals won, I should join RE/MAX, right? That should be the reason why I joined RE/MAX. 1997, the Liberals won. So I thought, oh my God, the Liberals won. I'm going to join RE/MAX Ultimate. And then in 2000, the Liberals won, or they all stayed in office. So I decided, things are great. I'm going to get married. And in 2006, the Conservatives won. So I thought, oh boy, now that they've won, I'm going to purchase and become the broker owner of RE/MAX Ultimate. And in 2011, when the Conservatives won again, I decided that now's the time, because they won, to expand to Dundas. And because the Liberals won in 2015, we've expanded to St. Clair. my point is maybe it doesn't really matter who the prime minister or president is, and it really matters on how hard and what you see in your future and what you want to do. When I was 18 years old, I've shared this story, I'll share it again. And I want to get this so we can get off. I mean, as hope exists with the pandemic, being where we are in our lives and moving along with everything that we've been doing and the positive forward motions and the vaccine being here, we have to start keeping our 2020 vision for last year and keeping it into 2021 and 2022 and beyond. It's extremely important. In 1988, I turned 18 years old, and I asked my father, who should I vote for? Who do you believe in? And I pestered him for 2 weeks. I drove him crazy. And finally, he sat me down, really upset with me. And he said, do you want me to tell you who I believe in and what I believe in? And I said, yes, finally. And he held up his 2 hands. And he said, if you're going to wait for somebody to make your life, I'll buy you a shovel, dig a hole, jump in and wait. And that was one of the things that I took to heart. And I'm hoping that, even though there's a lot of noise south of the border and around the world, and the numbers are going up, the numbers are going down, everything else, that collectively together we could, and for support for each other, we focus on the realities that doesn't really matter what the market is. If rates are 1.5 or 6.4, it's irrelevant. There's people who need our expertise and need us, right? So charting the course. Here's really exciting times for us. Charting the course is something that we've taken really seriously within the brokerage, and we've always analyzed in 2020 what we can offer and what we can do. And we're really proud to be launching very, very soon AchieveTheUltimate.com. Achieve, in short, Achieve is a proprietary. It is our training center. It is on-demand Netflix, Apple TV type training that we're going to do within our office. We've just been working so hard behind the scenes to get this up and going. And you're going to probably wonder why we're doing this and what brought this to light. And I want to share it with you. Before the pandemic, we would have 20, 25, 30 people register for a training class, and maybe 8 would show up or 5 would show up. And it didn't matter, we still did the class, but it was really hard to get people to all, life happens. There's no fault or blame, but life happens. And I understand while this is very important and you have an appointment to train and do and coach, if a listing appointment comes up and there's no other time and you have to go at it, or a buyer visit, then you got to do it, which means you missed the training. So, and the other part of it was not a lot of people always making it, the industry's changed. The industry's changed where, you have a brokerage, you have an office, but you don't just work around the office. We have agents who live in Mississauga, Aurora, Richmond Hill, Markham, Durham, Etobicoke, so many different places. And it's no longer an office where offices in general don't longer have people who just specialize around that one area. So commute times have become a lot more difficult. Lastly, we've always provided as an industry. We provided, God bless them, Richard Robbins, Brian Buffini, Tom Ferry. We provided these classes in this training by you paying $300, $400, $500, and we would always invest in you by completing the course. We would invest in you. But what did we do? We came into a room and we played a video, and then we paused the video and we talked about action steps. So this is meant to do that as well. All our meetings, including this one, will be in Achieve. All our past meetings, all our past training, how to do an assignment, geographical farming, the business planning, all will be in Achieve. We have people already like Andrew Foliato and David Greenspan already providing us with content. Kieran Gandhi will be there. Chris Leader, a lot of industry professionals, even that guy there you see on the screen, Larry Surqua, he has a few good ideas that he wants to share with everybody else, right? Our Ultimate Spark class will all be there as well. So we're working probably within 2 weeks, we'll have more and more content up there. And one of the things we're really excited to do is we're actually putting all our team, our admin team and our staff in a welcome video in this platform. And what's going to happen is they're going to introduce themselves, what they do, how they do things, and how to reach them. And we're even doing it like a full onboarding personality type of class in there. Moving on, let's talk about how we've moved along. We have the payee for deposits have been in our office for some time, but I just wanted to take this opportunity to update everybody on how it works. Effective January 28th, it is fully available. What this does is you're doing an offer. Some of you haven't heard of this before, even though we've discussed it, maybe you weren't part of our meetings, but this is going to be the new way of accepting deposits from our buyers. And what happens is instead of doing a wire transfer, and instead of doing an actual a bank draft, or instead of doing a certified check that costs over $10 to do, plus driving time, plus setup time and everything else, all you have to do is send all the cooperating agents a copy of this invoice. This invoice will be in their possession, but they go to their online banking, just like they used to pay just the way they always pay their Enbridge or realty taxes or the Rogers bill or Bell bill, internet, the Bay, again, Visa. We all love Visa, right? What you do is you add a payee. The payee would be called Remax Ultimate Trust. You just search it, it pops up, you click on it, and the winning offer that night, they're the ones who have to provide proof of completion of this payee statement. They would send you a screenshot from their mobile phone or an email from their mobile phone that it's been paid. And then you would sign the offer. You would accept the offer with your sellers. And the beautiful thing about this is your screenshot and your or your email acts as a receipt at that moment. There's no more buyer's remorse. There's no worrying about a fraudulent bank draft or certified check. There's no worrying about a wire transfer being reversed. There's no more worrying about 1750 and a wire transfer showing up 2 and 3 days later. This is very, very powerful. On the right-hand side, you'll see the bill processing. It happens 6 times a day, 4:30, 6 a.m., 9 a.m., 12, 6, and 10:45, right? So that's when the bill processing happens. Most offers are done after our offices are closed, but as long as you have that receipt, then you're good to go. All the instructions are on the actual invoice, so you wouldn't have to worry about that at all. And you can ask me questions about this right after I'm done my presentation. So our progressive approach continues. I wanted to share some housekeeping with you that our offices are now more integrated, regardless of the phone number that you may call or any of the phone numbers that our consumers or clients may call. If the phones are not answered at that branch location, it will ring at the next available receptionist who is signed in to receive that call. So you will probably hear somebody from St. Clair, from Dundas, from Bayview. Overhead, you may hear somebody saying, Tim, Park 1 or Larry, Park 2. Or obviously we can forward these phones, which we could always do before. We can still forward them now to your cell phone, but more importantly, here's something that we've integrated that is available now to you is there's a mobile app on your phone. You could be anywhere in the world. You could be in Portugal and France. You can be in your cottage. Doesn't matter where you are. You could be in Italy. You can actually get one of these IP phones, sorry, if you don't want the app. You can put it in your cottage or overseas summer home, and it will ring there, and you can call out from there as if you're here. So it will show up as the office, which is extremely powerful in our opinion. It was something that we've always planned to do, but there was no real need to do it. But now, because of the pandemic and what we've experienced and what we've done, you can have a home office, so we can get you a phone. And you can have it in your home office, and it could be an extension. And by the way, you log into the phone that says you're available, and you log out of the phone, which is unavailable. So if somebody was to forward you a call, it can go to your voicemail, your cell phone, or somewhere else. And finally, let's talk about the market. It's extremely important that I always share my insight for the market in 2021. As you know, I'm a student of numbers, and I want to share some really, really important things. In 2020, my prediction was 93,000 sales, keeping in mind that the year before was just done, around 89. The actual final numbers with 2.5 months completely erased due to a pandemic was 95,151 sales. The average price of homes in 2020 increased by over 13%. And I want to share with you that, homes in 905, as Rishi talked about, specifically Durham, we didn't talk about this before, but here he was talking about 20%. In some areas of Durham, I saw a 25% increase in values, right? So what's the magic adage that they could talk about? What do they say in real estate? Drive until you qualify. So a lot of people drove further out. Yes, they drove out for more space, but it's also for qualification reasons. And I want to share here's something really important that, we don't we don't have offices, everywhere in Ontario, nor do I ever want to have any offices. No disrespect to people who do. I don't mean that in that way. We are a Toronto broker. And what is really remarkable in being in Toronto is how many of our agents actually have TREB MLS data agreements with Hamilton, London, Barrie, because their clients want to look in those areas and they want access to real estate in those areas. Now, what Rishi talked about that he does not have access to, that I will share with you, is he was talking about GTA, and he mentioned TREB specifically as being a reporting source. Well, ladies and gentlemen, 58,000 users on TREB, and there are 72,000 members of AREA in Ontario. So over 2/3 of all members who are searching for real estate with their clients are members of TREB. And if you really think about it, these same TREB members now are actually selling real estate as far as Port Dover. We've had sales in Bowmanville. We've had sales in I can't remember if it was, Larry would remember, but I think it was Sudbury or Sarnia. I think it was Sudbury. I can't remember. It was pretty far up north. One of our transactions was a co-list, where more and more consumers are asking their agents in these outlying neighborhoods to partner with a TREB member. We're getting agents who are calling us in downtown Toronto saying we need a Toronto agent to put it on the MLS in Toronto. It's a real thing happening right now. So I can't wait for the day where data is one data set for everybody, so we can just get over this separate MLS board stuff and separate hoops. And it will happen. It's happening organically, and it's happening very quickly. Whether leadership in organized real estate likes it or not, it's going to happen because the realtors want it, and I'm in favor of that. And just because this is being recorded, this does not mean that I don't believe in boards in Ontario. I do believe in boards in Ontario. I just believe that the data should be accessible by all members in Ontario. So the condo market has experienced double-digit growth for the last 4 years, 10, 12, 13%. Having a pullback for a year does not put condos in negative. As a matter of fact, where Rishi does not know, because he's looking at numbers from a different perspective than we are, the condo market bottom has been about a week or two, three weeks ago, in my opinion, is the bottom of the market for condos. I'm actually seeing condo market values and activity going up. We're getting more and more condo sales in our office. And here's one for you to really share with your clients, that we're actually seeing a lot of rentals as well. We're seeing more and more rentals. So history may not repeat itself, but it definitely rhymes. Activity demonstrates that we're in a similar time frame as of mid-May of 2020. So just to give you some perspective, 2020, mid-May, we were starting to come out of this, a lot more positivity. And the difference is the feeling of hope. The feeling of hope is the biggest difference right now. I interviewed Restaurants Canada president, and his wife is in the medical industry. She's a frontline worker, and he went for his vaccination with his wife, and he saw the big lineup of people getting the vaccine, and the feeling that he got was hope. And a lot of people who I'm talking to right now are feeling very hopeful about the future, and as we're moving through 2021, just how much better it's going to be. The new listing peak for this year so far was January the 18th. We saw a surge in listings, and now it's like a mountain, where we're right back down here again. Inventory is horrible. We've seen between 20 and 42 offers on properties. We've been involved in transactions with homes selling for 200, 300,000 over list, and the homes are priced properly, and yet they're going way above that. And that's just a function of having really poor supply. So we're hoping to see more supply. The condo market right now, in the rental market, there's a 5.7% vacancy rate. Compared to a year ago, we were at 1%. I believe that it won't be till the third, fourth quarter of 2021 until we start seeing the rental market really doing better. What I am seeing is investors who are jumping back into the condo market. They're actually hoping to buy condos today, close in 2 and 3 months from now, and putting them for rent at that time. So they're kind of hedging their bets that the rental market will come back with time. So there's a little tidbit for you of what I've been hearing through some of the investors I've been talking to. And I do believe that the condo market's the pre-con market is going to experience a record year of launches. Talking to the GTA Homes team in our office, which blessed to have part of our company and very, very knowledgeable and always sharing their insight with us. This would be a record year for pre-con launches and a lot of interest. So fasten your seatbelts. It's going to be a pretty good year. Where Rishi and I don't agree is the amount of sales. We're going to see somewhere around north of 100,000 sales this year. I'm forecasting 105. That's going to bring us to the second best year on the MLS for Toronto. And the reason why I'm going to share this with you too, why I believe it's going to be higher, is because our footprint in Toronto is also growing. We're seeing more and more sales being reported as we're going through. So some regularly asked questions from everybody. We're almost done. Just a few more minutes. I want to really tackle these because it's exciting. Number one, stay tuned for our Ultimate Leadership Awards. We are going to try to hold off on doing any events until a little bit later. I want to kind of gauge, maybe might do the awards, in a little bit later, like April or May. I'm hoping to do an awards night for all of us. Let's see what we can do. If it all fails, we'll think of something. We thought of something for Christmas and the holidays for you. We thought of something for our 6-month semi-annual top producers with with your custom bags and your pins and everything else that we're doing with a nice letter. We do have all the numbers. We are preparing an announcement for all of our award winners, but I want to ask you for a favor. Be careful of the herd mentality. There are a lot of people who are suffering out there, both financially and mentally. Posting, let's together find a way. We're going to work on a way to post in a very classy way your achievements. We are calling them leadership awards and not sales awards. We do not want to talk about commissions earned during a time where people have suffered so greatly. We want to do it with class, and you are leaders. We respect you. We thank you. Some of you, I just do not want to miss anybody. Some of you have demonstrated tremendous leadership, increase in production by $400,000, and my heart is overflowing with joy. I just want to do it with class. And I want to do it in a way that we will be a beacon in the industry and demonstrate that we're not just commissioned people. We care about people as well. It's sensitive, right? It's a sensitive topic. So those are the two things I wanted to share about that, and it's extremely important. 3 big questions that we always get lately. When you have an offer and a mere post, who holds the deposit? Again, anything on an offer can be negotiated. A listing broker does not have to hold a deposit. A cooperating broker does not have to hold it. A seller doesn't have to hold it. It's whoever you agree to hold it. You as an agent cannot tell them not to do something, but you can advise them, of the pros and cons of having somebody else outside of a real estate company holding a deposit. When you're buying or selling for yourself as a licensed realtor, what do you need to do and when? You need to disclose in advance of the offer being prepared. Too many of us are doing some personal sales for our family members or ourselves, and we're seeing the disclosure document coming in later. That's a huge no-no. It's very, very dangerous. And here's one that we're getting, unfortunately, lately, is you have an offer date and a seller has requested, you have an offer. Did I write that right? Hold on. You have an offer date and the seller has requested you have a buyer representation signed. Buyer calls you and shares that a friend who bought a house, their agent gave them a 50% rebate and want to know what you will do. So we're seeing people doing rebates. This is not something, there's not a lot in our office, but we're seeing this kind of creep in a little bit. You don't have to offer a rebate. This is your value add. But remember, these new ways of doing business are created by whom else but us as agents. We are not the ones, the consumer does not wake up one day and say, oh my God, I think today I'm going to wake up and I'm going to ask for a rebate. So these are things that we actually have created in our industry. And I want you to be careful of the language that we use. So respect your time. It's noon. We've been going at 100 miles an hour. We've had some great speakers. I know you might have some questions. For now, I just want to say thank you, for being part of today. And Rebecca, if there's anybody who has any questions, I'm more than open to answering them right now, or we can go on with our day.
I do have one from Paulette. She's asking, with this new direct deposit system, aren't there max limits on e-transfers?
So on our, thank you, Paulette. That's a fantastic question. And that's a question that we had before from, I believe Bill Crook brought it up, which was fantastic because I actually took it back to our bank. At TD, who we bank with, there's no limits. At RBC, there may be. At Scotiabank, there may not be. At CIBC, there may be. So on our actual invoice, we actually have an instruction to have the consumer verify with their financial institution in advance of making the offer. There are two solutions to that problem. One solution is that you provide that you have the limit lifted by informing your bank of what you're planning to do. So let me back up 1 second. First of all, many of us have paid CRA for our income tax for last year, and it goes through no problem. So, but you have to still make sure that you ask that question. So number one is, you asked your bank. Number two, your offer might be different. Your offer might be direct pay deposit, $25,000 upon acceptance, $25,000 in 24 hours. Just giving you a solution to the problem or the challenge in the event that you get a cooperating broker who says, I can't do 50, I can do 35. Then do 35 today and do 15 tomorrow. But the limit is never 10,000. It's never 5,000. The limits that we've seen have been quite large, like 40 or 50. So I think that any one of us would be happy with a $35,000 or $40,000 deposit on a property. But thank you for the question. Any other questions?
That's it for the chat.
Does anybody want to speak up, or are we good to go?
A very small thing.
Barry, about the AREA forms. Oh, sorry,
Yeah.
you're there.
This is AREA has published this.
Yes.
You can carry it with you. A couple of agent friends of mine told me they were actually pulled over by the police, questioning why they were out and what they were doing. They said, we're essential service, and the cop says, I don't believe that. They didn't get the memo. So AREA has published this, to whom it may concern, and there's a whole form to go with it. I'm just throwing it in the car and keeping it with me at all times.
Yeah, so you can have that. I mean, we've talked amongst other RE/MAX brokers, and we believe that by the time anybody gets pulled over, and again, it happened in this case. I haven't heard anybody else getting pulled over, that things will change. But having your RICO license on your mobile phone is sufficient enough to show that you're a realtor. My concern, Barry, the reason, and I want to be fully transparent with everybody of why I did not put a memo out, because I'm just getting tired of so many memos, and I'm getting tired of so many new forms and clauses that we all heard to create. Where by Family Day weekend, which is 2 weeks away from now, even more kids will be back in school, in my opinion, and there'll be a lot more easing of things going forward. I'm just trying to manage the noise for everybody. And thank you for that. So with that, I want to thank everybody for being part of today. It was, I hope you found a lot of value. And if there's any questions that you have, by all means, please do not hesitate to reach out to me. Thank you again, and have a wonderful, wonderful day.
Thanks, Tim.